Well, welcome back, everyone. What an interesting day Powell made for this market. We've got a market that had a rate cut and a 50 basis point rate cut, which is a sign that something's really wrong. He had telegraphed 25 basis points. The market started pricing in likely a higher one. And for him to have taken that 50 basis point rate cut, you'd presume that the dollar would drop dramatically. Well, it did. And this is a chart of UUP and ETF on a daily candle basis. It dropped, but then it popped. Why did the pop happen in the market? Well, if more support is required, i.e. cheaper money is required, cutting rates does not instantaneously help Main Street, but it can help Wall Street stay up in the air. And that's effectively what the message was, because his message that the real economy is good and we want to keep it there doesn't really fit with 50 to 100% change in cost of food in many areas. Transport costs up, insurance costs up, and this is just the tip of the iceberg. Yes, inflation's come down. However, it's still rising at a slower pace. CPI at 2.5% roughly. Look at Truflation up 1.5%. It's simply the higher prices from last year moving higher, but at a slower pace. And if folks aren't seeing their wages inflate at the same rate or greater, it's gonna be an issue. And I think that the market's reacted as such. The market effectively had a breakout, had a little party when that 50 basis points was announced, but that was just the tip of the iceberg. And the iceberg is everything that happened afterwards here. So let's take that as a sign that the market is likely to start to smell out crisis. And this may still be counterintuitive, folks, but it does allow for that fear to set in, a problem to emerge, potentially a risk-off move that takes us down to Japanic Monday lows back at the beginning of August, or maybe even lower. But what that crisis can do, which is not a maybe, is allow for even more monetary policy stimulus to come in. And that, as we know from lessons going back to the Nixon era, 1970, is a positive for risk assets, and especially for things that are priced in the other side of the dollar. And that is where I want to bring the conversation to kind of an end here, where you see a chart of the S&P rising, rising, rising. And we know what happened in 2022. We know what happened in 2020. And it ends the day today on a little bit of a somber note, but it has not broken down. A pullback of some significance and another bounce is what I'm expecting over the course of the next week. Have an incredible rest of your day. Thanks to all that joined us and got some incredible learning from Stacy earlier today. Raving about that from folks who have written in, and happy that you had the opportunity to. Have a great rest of your day, folks. Bye for now.